The 4-step method to high-performance trading and the 7-step daily routine for high-performance traders are both free downloads. The 4-step method for high-performance trading is about developing the mindset and the routines to increase your confidence and your ability to execute your trading edge in a live trading environment. Constant progress. 7-step daily routine for high-performance traders is an audio program download designed to help traders bulletproof their day-to-day habits, discipline, and develop a winning mindset. Again, the link is in the description box below. They're free downloads. Let's get started. Just reminding traders, if they're new to this channel or if this is the first time you've seen this video, if you go to this playlist, everything you need is in this playlist as it is titled. We go over the templates, the timings, the levels, the behavior of price. This will help to bulletproof your understanding of the best trade setups in the playbook. Again, these are free videos on the YouTube channel to support and enhance the skills and the development of your trading prowess within the playbook itself. Everything you need is in this playlist. Hey traders, Stacey Burke from Stacey Burke Trading. Today we're going to be talking about opening range breakouts and Monday opening ranges that have broken out of closing ranges of the week. Friday is the closing range. Day 1, Day 2, Day 3. Wednesday is the midpoint range of the week, heading into our closing range on Friday. And typically when we look at a new week, Monday, Tuesday opening range and initial balance, we are looking at breakouts that have triggered other time frame traders at the high of the week, the month or year, or the low of the week, month or year. This can offer us an opportunity for reversal trade setups with trapped volume up high or down low. And we'll also talk about the difference between a reversal and a parabolic setup for a reversal trade. And we will also talk about how Monday is the opening range, Tuesday, Day 2, forms our initial balance, and then specifically the levels, high of day, low of day, closing price. These levels, which we will talk about in a moment again, are 3 levels that every single trader has coming to the screen when a new day, a new session starts. And then so coming back to the understanding that I am hunting setups, specific setups for either reversal or trend trades on day 2. My approach is to focus on 90-10 setups, and typically parabolic opportunities will culminate with a pump and dump template or a dump and pump template. And that comes back to understanding the opening range and initial balance. We'll look at a difference between a reversal trade today versus a parabolic reversal setup and the difference between the two. And of course, coming back to our basic model for trade entries and being on the front side of 3-day setups or the backside as the week evolves, and specifically talking about 3 session setups when we head into the New York session. So again, understanding Monday's opening range and initial balance from the playbook. The other scenarios that we will look at today are the inside day opportunity that occurred on the indexes and the difference between the 3 and how they set up heading into the open of the New York session. I just want to do a short review again, understanding the high of day, closing price, and low of day levels. Every trader has these levels when they come to the screen. This is yesterday's levels, but this tells us where sellers came into the market the previous day. This tells us where buyers have come into the market the previous day. Now, whether or not those levels will hold depends on the type of setup that we have, the day count, and the timing that the setup occurs. You can have markets that have broken out and closed, and throughout the day the market may trade around closing price, and as we saw on the Japanese yen, break down for a parabolic reversal trade, pumping up into closing price level. Now remember, if traders were long at that level when the New York session opened over here underneath, they are now losing money if they are holding long positions. Where is the money? In the long positions held into the end of the day, into the session. Understanding the concept of other time frame traders. A lot of traders are fixated on that it has to go up here to hit a stop to go back to the other side. They may already have other time frame traders having entered into this market, and they may be
the ones driving that move down into the open of that session for the reversal trade opportunity. But I will reinforce, I'm not looking at little candles. I'm looking for opportunities and setups that come off of these levels. Today specifically, we're going to be talking about a couple of failed breakout opportunities on day 2 that occurred at the lows of weeks and highs of weeks and the new months, which reinforces the understanding of the new month timing cycle. In the playbook on page 25, we talk about false breaks can be the beginning of large moves, page 25. And also the importance of new timing cycles. New month, we're into the 5th day, 6th day of a new month, and we had instruments that went to the highs and lows of the month and the year in a couple of cases. We're looking at the Japanese yen, and we have the 1 hour chart up. Monday's opening range went and triggered the high of the year, the high of the month, the high of the week. We'll just crouch this up together. So we now have triggered potentially breakout traders in the market at the high of Friday's high, the closing range of the week, as well as the high of the year, the high of the month, and the high of the week heading into our day 2. Something else I want traders to pay attention to is that not only is this a fairly narrow range day, but you'll notice that the entire day traded above closing price level. Closing price level. And if we just zoom out here a little bit, we can call this a neckline. We can call it a death line, in that the volume is all contained above the closing price of the week. But also on our longer time frame, we have the bulk of the entire end of the US session and Monday above the lows of these hourly candles. Again, other time frame traders. And this involves this candle. I'll just draw this as the beginning of the 4 hour. Actually, we'll bring it down here. The 4 hour cycle on a currency pair is 9 a.m. New York time. So we have other time frame traders in this market now. That would be the break of our last 4 hour high. So when I have an hourly chart up here and these levels are broken, so I have traders asking, will they just align their daily trend with their 4 hour trend and their hourly trend? Understand that when these levels are broken, all these time frames are in the market. I don't need to have all these other time frames to understand that they are already in the market. So Monday's opening range is a narrow range, but we have broken out and closed out of balance. We've gone over this in several videos, so go back to the playlist. We closed out of balance. An out of balance market has the potential to remain out of balance or return back to its value area. It has the potential to go on a larger move. When we zoom in though, we have an engulfment and pin hammer prior to our New York Open. So we'll just highlight this. This is prior to our New York Open. We have our engulfment and pin hammer, and we are underneath closing price. So remember, if you are long, I talked about this in the last video. If you were long at the close on a longer time frame, holding on to this, you were in the money heading into the last part of the London session before that engulfed pin hammer engulfment at the high of the day inside of our opening range and back inside of Friday's high of day breakout level. So heading into our New York Open, no major red news on the calendar. We have a lower low on the inside, which is the setup for the pump and dump. Now, a great question from a trader was, how does something go parabolic versus just a reversal? Well, again, the coil, the pump and dump is the parabolic setup, or the dump and a pump. A market that just reverses, which we'll look at an example in one moment, on the British pound, a reversal day that just trades back inside of the same range as Monday's high and low. So we're not out of balance, we're just trading back and forth in the same range. It will trade back up or back down, but it doesn't coil into a pump and dump coil for an explosive reversal or trend trade opportunity. 9:30 New York Open, we are underneath of our failed breakout and coiling at 9:30 a.m. New York Open for the parabolic collapse that goes sideways to the end of the hour, and then the capitulation for the range expansion and the parabolic opportunity. So to understand, a parabolic trade goes vertical. There's zero heat, zero stress. What was the initiating signal to this? We had Friday closing range, Monday's opening range. So coming back to simple understanding, Thursday is the low of the week. Once Friday breaks out, we now have two levels. So I'm going to just reinforce that it is not just a market that pulls back inside that confirms a failed breakout. That is not true. That is not true. The pin hammer breaks a level. The break of the daily high on Friday confirms Thursday as day one, Friday day two, Monday pushing higher in a new week, a new template, triggers other time frame traders, day three, and a parabolic reversal after day one, day two, day three, which comes back for traders to understand that until the setup is there, this can be a day three on a Monday, but the setup didn't occur until Tuesday's New York Open session for an easy 50 pips of parabolic reversal opportunity after a failed breakout. High of the week, high of the month, high of the year, opening range, triggering other time frame traders at the high of the week, and a parabolic reversal New York Open back through the low of the day, the low of the week, and the new week. And we have volume trapped up high above the closing price of the week level. We just look at it on our number and opening range, initial balance. We had lower lows, a range expansion on the downside, just simple pump and dump heading into our New York Open. Very straightforward. For traders who like micro M's and W's, there's our M pattern at the top. We can put our universal entry criteria onto this chart. It coils sideways. That coil sideways into the EMA is what gives us our explosive parabolic trade. Canadian dollar, a similar situation. We had a market go vertical on Friday's closing range and continue that range expansion on the Monday, day one, taking out the high of the year, month, and week, heading into our day two, Tuesday. We have breakout traders in the market heading into our New York session. Lower lows on the inside. So if we just back this up, we're on a 5-minute chart. Our opening range auctions lower in the Asian session before putting a low of the day in, and then the Europe Open expands that range on the downside. Opening range trades higher before breaking down in our US Open window, and that is our initial balance. Our opening range initial balance and a lower low on the inside that pumps up into closing price and our high of the week, year, and month level into the New York Open. Excellent question from a trader is, well, how come I've seen price go to the high or low before and it doesn't go parabolic? My response to that was, what time is it? What day is it? And what setup do you have? It's not just a matter of a market going to a level at any time, anywhere. What setup do we have? We have breakout traders in the market, high of the year, high of the month, high of the week, day one, Monday's opening range, and then a pump and dump template heading into our New York Open, a 3-session setup for a parabolic reversal, no major red news, a 3rd-hour consolidation, and a 4th-hour parabolic collapse. The setup was there, took a little bit longer to unfold, but for traders that were patient, willing to sit on their hands, have a starter in the market, add into that as price was confirming, add more into that for the parabolic blow-off on Tuesday, day two. And you'll notice again, if I just go back to my 15-minute chart, we had breakout traders in the market, and we had space for this market to collapse back to the breakout level on Tuesday, day two. Both Japanese yen and the Canadian dollar are examples of reversal, parabolic reversal trade setups in the New York session. Now we'll look at an example of a day two trend trade, signal being a first red day on Monday, our opening range. Now I'll zoom in a bit here just so traders can see this. This almost has the appearance of an inside day, but it did tap out the high of Friday, so not technically a completely narrow range consolidated inside day. So we have a day one, and that means today is a day two heading into our US session. We just tapped into the low first hour. We triggered other time frame traders. But the other thing to recognize with this market is that this is a split opening range. We have a day zero type of setup, a peak formation high that breaks down and a peak formation low. This is an example of a day zero setup coiling in one day, an opening range, split, consolidation for the pump and dump parabolic trend continuation on Tuesday, day two, after a first red day signal. Another question from a trader was, how can this be a best trade candidate setup? Well, it's a parabolic setup because, number one, it's a trend trade, a day two trend trade. But also, remember what I've talked about. When a market coils, we have lower lows, coils sideways at the high or low of the day. It is getting ready to have an explosive move. The larger template is just merely a pump and dump template driven by other time frame traders. Remember, these are all hourly chart setups. We have other time frame traders driving these moves. We have a first red day sell high signal in London that breaks down and makes lower lows heading into our New York Open session. Another excellent question I had was the British pound a best trade candidate setup? And I said it's a reversal trade setup, but there were better candidates. And what I meant by that for the US window is that there were parabolic setups. Now you'll notice this market was in breakout, but it closed outside in breakout in a large range day. Typically, we want to see that market trigger other time frame traders pulling back and coiling for a parabolic setup. This market has just traded back in the range that it was in from Monday, meaning that yes, it is a reversal trade, but it may not have been the best candidate. That's my opinion. There'll be people who took this and it's still a good trade. But in terms of looking for a coiled market where we've gone maybe sideways down low for the explosive move in the US window, this market is already continuing to move higher as the window sets into our New York Open. We're buying inside of this range. The move is, if anything, a low-hanging fruit, but we're trading back in the profile that was set up in Monday. Hopefully that makes sense. The difference between a parabolic setup like we saw in the Japanese yen, where we have a pump and dump template, the market on the British pound is merely trading back in its profile in the market's opening range that was established on Monday. We're looking at the NASDAQ, and as I mentioned, the NASDAQ was the only index that had broken other time frame boundaries. We had high day level broken earlier in the day, and if we look at the other two indexes, the S&P had not yet broken a daily level. We had an inside day on the Monday. Heading into the New York Open, we had not yet broken a high of day or low of day level, which is why I favored the NASDAQ as my best candidate heading into the New York Open. DJ30 was a breakout on Monday of Friday's low of day level, but it closed back inside. And again, this gave an opportunity potentially for traders into the open. Was an excellent long trade. We'll look at the shorter time frame of that market. So again, recognizing where other time frame sellers came into the market into the close of that session as a potential significant level as the market was about to open up. We'll look at the opportunity that occurred on that market on the smaller time frame on the 1 minute chart. Heading into the New York Open, we have a higher high on the inside as a dump and pump template. And the thesis is that traders who are short at the close of the day would now be trapped with the dump and pump scenario. We have 3 minutes in for an explosive parabolic move targeting other time frame sellers that were in the market towards the end of the session. A fantastic parabolic opportunity, potentially more aimed at more experienced traders who knew exactly what they were looking for. The NASDAQ, my thesis was a failed breakout of the inside day. Page 69 in the playbook, false break, reversal opportunity at the New York Open. As I mentioned earlier in the previous video today, the mindset reset, this market had already gone up to that high of week level, the high of Friday's closing range, and sold off earlier in the day, made lower lows on the inside. It had already gone up to that level and sold off. What that tells me is that there are sellers that came into the market. Other time frame sellers came into the market earlier in the day, recognizing that they potentially may be selling up there again. This is the 1 hour chart. We made a lower low. That is the template for the pump and dump. Thesis being that if this market does collapse down, we now have traders who are long above the closing price of the week on Monday's opening range, targeting potentially a range expansion opportunity for the New York Open. This opportunity acted like a first bar trade. Now I'll repeat, I went over this in the last video, 2 videos ago, the 4 types of first bar candidates after major red news, but this exhibits on the open, this is a 5-minute chart, the same behavior of a first bar trade. First bar traps the whole upper level of volume, and it will go completely to the other side of the range. So first bounce and first bar are not the same thing. First bar is 3 levels of rise, and a pump, in this situation, a pump template, an engulfment at a level where we've already had other time frame sellers enter into the market. As one trader said, I didn't like the size of that wick. Now I'm going to show you on a smaller time frame where experience comes in. We have a 3-bar reversal on the 1-minute chart. We have the same setup, and that 5-minute candle that closes right here is the same as our 5-minute candidate, but we have the opportunity on a smaller time frame to get a starter position in and potentially add to that into the close of the 5-minute candle, and then be adding into that trade as price confirms in a new 15-minute rotation, targeting a range expansion and potentially a move towards the end, the low of the day, where on the inside bar failed breakout. Now this market hit the range expansion, took a little bit longer. So for my situation, as I talked about earlier, was I took money off as soon as we went into the sideways consolidation and left a small trailer that took me out at the range expansion level. I did not hold that for longer because this market should have collapsed. If it was going to go after the money, it should have went straight down and then potentially pulled back. It did not do that when we went into this consolidation sideways. Most of that trade was off the table with a small trailer targeting the range expansion in the low of the day, which it did not get to. It just exited at that level, took too long. Timings, levels, behavior of price. Anything that takes that long, it's lost the juice. There's no fundamental driver. It may hit it in Asia today, no idea. But we had an inside day as a signal day, and then timings, levels, behavior of price. Now I want to just mention one other thing again. We were above the high of day level when the market opened. Market is out of balance when it approaches this area. That is a breakout level. Once it's up here, it's out of balance, and it has the potential to either continue in the direction of that range expansion, as Dalton talks about in market profile, or reverse. It's an area where the market now is out of balance. And when a market opens out of balance, that is when it has the most significant potential opportunity. Looking at the Japanese yen, I just want to reinforce the concept of a parabolic opportunity. Timings, levels, behavior, price, no major red news on the schedule. We have 3 levels of pump. We have our first level. We go into a second level, and above the closing price is our third level before the collapse. This is prior to our New York Open. Lower low on the inside, the pump and dump template. There's only two templates. When people ask me, what's your thesis? I don't know what to say. I've repeated this 1,000 times. There's only 2 theses. It's a pump and a dump, or a dump and a pump. And it's either a failed breakout or a trend continuation. So understand the importance of these levels. And when we involve high of week, low of week, month, and year opportunities, all of this ties together. And if we just get rid of these smaller lines inside, recognize the closing price of the week in this case acts as a death line, a neckline, whatever you want to call it. We have volume trapped up high. They've worked the high before going parabolic on the failed breakout on day 2. Opening range, pump day on Friday. No idea. This is our first red day now. Heading into our Wednesday, Free Cash Wednesday. Don't know what will happen today. What's important? Timings, levels, behavior of price. We now have shorts in the market at the breakout of Monday's low of day level, and we have long traders in the market from Friday's breakout of Thursday's high, but we do have a first red day. No major red news on the schedule for Wednesday, and the important part is timings, levels, behavior of price, and the behavior of the trader. So keep it simple, traders. Focus on the simplest, highest possibility / probability opportunities for parabolic trade setups. When they're about to go parabolic, they're driven by other time frame traders, and they have the potential to be scaled into for larger opportunities. Keep it simple, keep getting better. Congratulations to the traders that hit these trades. There were several other opportunities, but in the interest of time, we will go through the ones that I felt were probably the cleanest. We can go in a separate video and look at gold for the reversal opportunity, but this was a fantastic Tuesday, day 2, reversal opportunity on several pairs. Keep it simple, and may the markets go with you.